Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. Between the OTC, New York Stock Exchange, and NASDAQ, there are over 22,000 companies traded publicly. I feel that small businesses are the backbone of America. The number one reason for this channel is to help small companies gain exposure with potential consumers, investors, even partners. Take, for example, today's guest. CEO Chuck Ferry of Dous Technologies Inc. and President Doug Recker of Dous Edge AI. Dous Technologies and Dous Edge AI are both edge artificial intelligence plays that are revolutionizing industries, the railroad industry and the data center industry. But I'll let Chuck and Doug tell you more about that in just a minute. It's important for you to understand that this is not a paid-for promotion. I do not collect compensation for the interviews I do here. I do look for companies that could potentially provide an above-average return on investment, but that is not the primary reason for the channel. There's a thing called impact investing. It's tied to environmental, social, and governance. By helping a small company become a large corporation, if you and I can become ambassadors of a product because the values of that company align with our own, think of all the jobs that will be created as that small company becomes a big company. Think about the community that that company is in. Typically, they thrive along with the company. This channel is to help companies that are relatively unknown become known so that they can build a following and they can have brand ambassadors that share their vision, share their mission, and are willing to do what they can to help have a positive impact on humanity. That's what this channel is all about. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, you speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up and a brand new interview of a company that I have been following for, I want to say three plus years now. And I think is in the most amazing transformational stage, exciting. But I'll let these guys talk about that. Chuck Ferry and Doug Recker, now the president of a spinoff from Dous Tech, which is Dous Edge AI. And Chuck, what a transformation, man, from 3 years ago. Huh?
Yeah, I think we're, like we said in our earnings call, I've been talking about diversification for a couple of years now, and we're finally now getting to that in a proper and organized manner, if you will. And so that basically, so we have Dous Technologies Group, which is the parent, and that's what's publicly traded and what people own their shares with. Underneath that, we've always had Dous Technologies Inc. That's our railcar inspection portal business. But as we, publicly announced, Doug and I did that together. We brought Doug Recker with us on board. I'll let him introduce himself in a moment. But we stood up Dous Edge AI, which is effectively, installing edge data centers in response to the overwhelming demand right now for edge computing and all things related to data centers. And then because, we have tremendous experience on staff here in the power industry, the data center business is screaming for power. And so we've been taking phone calls quite a bit over the last year on power itself. And so we've just incorporated Dous Energy Corporation, again, as a third subsidiary, as a third line of business, because, the demand for it has been overwhelming. We know how to do it, and we've got good business plans for both Edge AI as well as power, and of course our railcar inspection business, which is moving along nicely. So yeah, a lot going on. And why don't we let Doug introduce himself and talk a little bit about that edge data center
Sure,
space
sure.
there.
Yeah. I'm Doug Recker. Just give you a quick background on where I come from, what my history is. Back in 2008, I started my first brick and mortars, two of them in Florida, and exited those data centers in 2014. And roughly 5 years after that, I came up with the micro DC model, which basically build micro data centers and deploy them. I did them with American Tower to start, and then we brought them in and we were deploying them for Dish Networks for their 5G rollout. And then I exited that business, sold that business last April, and started a new one in basically July. And what we do is the same thing as we deploy micro data centers to where there isn't good connectivity. It doesn't make sense to build a big brick and mortar, say in Amarillo, Texas. Why build a $50 million facility there when you can't support the local retailer enterprise customers there? So what makes sense is deploy a smaller data center and create a peering point where you bring multiple carriers in and then bring that latency down. And then also you bring better connectivity, because in towns like that, people don't realize they have basically one main connection coming in. If that connection goes down, the whole city is down. Or these remote schools, and the kids in those areas don't have access to high-speed internet, right? And they're building out, they're trying that, but basically I come in and support that behavior as well. So when I drop a pod, we'll use Amarillo, I drop a pod in Amarillo, now they can use that basically as the hub and spoke. All the hospitals and outlying areas, schools, networks, they can all come back in there and cross-connect in there and fly back to the major data center, which would be, I don't know, 500 miles away in Dallas, Texas, or 5 hours away. So it brings the latency down. It also brings in competitiveness also. So now you have multiple carriers that you can buy connectivity from, and that basically brings the price down of internet as well. So it's great for tier 3, tier 2, tier 3, and tier 4 markets, and that's really what we'll talk about our focus is going into here in a little bit. But that's basically what Duos Edge AI has been developed.
Do you have an estimate of the size of that market? What's the TAM on that?
Well, I mean, basically what we go after is, I look at a town that's got 8,000 to 30,000 people, right? So an 8,000 person market's still going to make it for me, because basically I build the pod based on the market. So if I go into a strong market like Amarillo, let's say 15 cabinets in this pod is a perfect fit, because who takes space is the carriers, right? They have to come in and take space. So they occupy rental space, which is cabinets. And our business is basically almost like a real estate play, right? We want to sell space, power, and cross connects. So the carrier will come in, and their benefit is, hey, look, we want to go after the customers that are co-locating in there, and they look at the bigger picture. So let's just use the school system there. The school system is on FiberLight. They're building out a big network to all the schools. Well, FiberLight's building higher bandwidth to these schools. Now they go back to a main POP somewhere. And traditionally, it's in a main market. Well, now that POP can be back at their main center or their main hub, which would be the high school, or say it's a corporate office for them. And it's a meet me point. So they'll come back to there, and then they'll drive one line in instead of having one line from each school to go all the way back to Dallas. So it's basically, it's a cheaper for them, better connectivity, and it's redundant. So we're bringing redundant market.
Also to add to that, the total addressable market for this edge data center business, I think we quoted a pretty senior analyst from TD Cowen. It's in multi-billion dollars per year total addressable market. I mean, the demand is so high. You could have 4 or 5 or 6, Duos AI companies, and they would not overlap. The demand is so high right now that the total addressable market's almost not even worth talking about, because it's as fast as we can build them.
Right.
Basically.
Right.
All right, so the smaller data centers, I mean, one of the things with data centers, they're big consumers of power, right?
Correct.
That's one of the knocks on them, is that they're big consumers of power. So this is a bit of a kind of a solution, right? I mean, because you've got a smaller data center, you're not consuming as much power as
fraction, right.
right.
So our data center average is anywhere from 150 kW to 300 kW. So these aren't high dense, high compute, because that's not the customer we're going after. We're not saying we're not going to go after that, but right now the immediate need is that niche, the 100 to 300 kW. And every market has that available. We can pull that off an existing transformer, off an existing building. So it's not a huge demand.
Is there a focus on potentially trying to go with some kind of a renewable source of energy for these data centers, or?
Sure, absolutely. And what we want to do is we want to get these deployed and try those technologies out, right? We want to have the main source of power coming in and then experiment a little bit, like the Bloom Energies of the world and solar and all that. So it's a good niche for that type of power, because once you get into the megs and bigger, then it's renewable power is a lot tougher, right?
Okay.
And so that's kind of a good intro now into so on the Duos energy side of things, or Duos power, that's actually now, so you've got these larger data centers. Some of them already exist, and they're not able to turn up or fill up and start using some of these larger data centers because they simply don't have the power available. And in this case now, we're talking, 100 to 200 megawatts of power in this case. So right now we have a business plan that we're working against right now to basically provide what we used to do at my old company, APR Energy, and that is build fast power plants, around the globe. And so right now, Doug and some of the other guys on my team, but primarily Doug, because of his connections in the data center space, we're in contact with probably, upwards of almost 10 different interested large data center developers or operators, as well as some other energy companies that kind of focus also on the data center space. And we're in discussions with them right now to develop, blocks of power in the 100 to 200 megawatt range. That's places where they can't get enough utility power. It's also places where they have large quantities of natural gas. Again, think of Texas has large quantities of gas that's coming out of the oil and fracking fields, and sometimes they just have to flare it off.
They burn it off, right?
That's right. There's places out in Arizona and out even probably near Las Vegas that are probably similar to that. But so right now we're in those discussions and developing that. We're a little further ahead, of course, on the edge data center side. We've already got commitments to put the first 3 down into the Texas location right now, and more are coming in. And we're not too far behind that on some of these power projects that we hope we'll be able to announce here probably in the next few months.
Chuck, I want to highlight what you said was that the company that you had previously. You want to talk about the growth of that company that you ran?
Yeah, thanks. From 2016 to 2020, I was the COO and president, and then later CEO of a company called APR Energy. They're still in business today as we speak. In 2016, it was really kind of a turnaround situation. They had just been delisted from the London Stock Exchange, had been taken private, and we're having some challenges with some of the projects that they put in. So in 2016, they were pushing probably about $200 million of revenue. We're kind of in danger, quite frankly, of potentially going out of business. I was hired by John Campion, the chairman and founder, to come in late 2016 and help turn the company around. When I left in early 2020 after a transaction, that company was producing north of $600 million of revenue. Some of it due to asset sales, but I would say adjusted, it was about $350 million of top line revenue. We had reduced our debt from $500 million down to less than 300, and we successfully refinanced that debt instrument. But most importantly, we had about 30 turbines at the time, and we had about 29 of the 30 all fully deployed and utilized on good contracts. So it was a good job, a good time for the company, and we had a terrific team there. And it just so happens I have probably about 14 or 15 of my 8 players that were with at that company are now with us here now in Duos. And so those are the same guys and gals that are now supporting Doug's business for on the ground, and also supporting my high aspirations to further diversify the company.
So Doug, I read your background. I mean, you're pretty well known down there in Florida, right?
Hopefully good. Not just in Miami. Yeah.
So to put it, I've been traveled down twice with Doug. Most recently, we're at a TD Cowen conference out in Boulder, Colorado, and Doug's a rock star in that space, and so I know that a lot of folks are excited he's back in it, and we're certainly fortunate to have him for sure.
I look at what you did at your last company, and I'm looking at the similarities of what you walked into here at Duos.
Yeah.
And I know it's just because I kind of think I know you. This is taking a little bit longer than you wanted it to take to turn Duos around, but this company.
Yeah. I mean, part of that is early on, obviously it takes a little time to learn a new industry. So, and for me, that was the rail industry. I've been in other industries before, but what I kind of realized after doing, and I made a decision to focus solely on the rail car inspection portal and solely on the existing rail customers that we had who were were questioning whether they should retain us, right? So really the first year, 18 months to almost 2 years was spent doing that. In hindsight, if I knew what I knew now about the rail industry, and that is they absolutely love the rail car inspection portal technology. They all generally agree it is a game changer and will be taken up in large quantities in the future. But they're just an industry that adopts things a bit slower than other industries. And so and I'm not willing to wait that long. And that's why, I was able to recruit Doug in as well as some other folks and diversify so I can hopefully, with everyone's help here on the team, accelerate, the return on investment to our shareholders.
Which I think the recipe that you have here, the pieces that have fallen into place are, I mean, I listen, if people don't understand it, they need to pay better attention, in my view, right? I mean, this combination could be just unbelievable. And I think I've asked you before, Chuck, you didn't come here to turn Duos into a $50 million market cap company, or you came here to.
Absolutely not. I came here to run a company that's, has a B on the end of it, billions. And I know Doug feels exactly the same way. He and I want to both, hit it hard enough that he and our friends here, we can buy a private island. And our shareholders are just so happy that happy with us. That's what I want. Yeah.
Yeah. And I think this is I mean, you couldn't script this, I don't think, any better than the way that it's kind of fallen into place, right? I mean,
yeah, sometimes you get yourself into situations and you get started on it and sometimes through hard work and sometimes good luck and timing or a combination of both. You can that's kind of how we worked our way into what we're doing right now. So my motto when I was in combat in Iraq and Afghanistan was kind of taken from the movie The Gladiator. Okay, imagine where you will be and it will be so. You just got to stick to it. You really do. And I think that's what all entrepreneurs do. And they just kind of imagine where they're going to be and they keep working really hard and eventually they get to that point and they make it. So
I think the two personalities are I think this is going to be like the dynamic duo here.
Hey, don't get it wrong though. I'm just a grunt from the Marine Corps. I still lock it up when I walk in his office. He still makes me nervous, being that, all that fruit salad
Well,
and
the
all that
combination
shiny
is,
stuff.
the combination, I think, is obvious to anybody who kind of, gets around the two of us, right? Every company that's going to be successful needs to have somebody along and a team behind that person that can sell their butts off. The natural, the person that's going to make it rain commercially. And then when you back that up with a team that can execute, all that fresh meat that's brought through the door, that's where the real success comes in. And that's kind of the kind of teams I've been able to build, kind of throughout my lifetime. So yeah, but you got to have that front end talent. And that's really what Doug brings to us. And I may not have had, as much of that talent previously, but now I do. So
What's the energy like in that building?
Oh, it's awesome now, brother. Let me tell you. I'm wearing the carpet out though, but other than that, yeah, it's good. It's great. And I tell you what's really cool. So because obviously I haven't been a part of a public company before, and I haven't, it's me, right? Before, always on me, and I'm running crazy. Well, what's great about this business is I come in and there's a lot, there's people working in the building, and then they feel your energy, right? And then they bring energy out, and then they pop in my office and say, "Hey, do you ever think about doing this?" I'm like, I go over the whiteboard. Good idea, right? So it's like, it's really, really working out well. And what's what I want to say before, what's cool, and this is why I'm glad I made the right decision. Chuck is I basically go out and find and kill the rabbit, come back, and he fixes up and says, "Okay, Doug, you can't do that, but you can do this," right? And we work well to that way. But we have a few patents that we're working on right now in the edge business that he's supporting me on, so it's great. So I can bring an idea to him. He says, "Well, that makes sense, but I like this one better. Hey, I'll take it." So, and then I can go down that road and do it. So it's been a great partnership. Short so far, but it's the progress we've made in the last 2 months is more than I made in 12 months before. So that should tell you something. So as long as we keep this together and focused like we're doing, look out. I mean, this power thing, I can't tell you how big that's going to be. I mean, I know I'm not supposed to say a lot, Chuck, and I won't, but I've had four calls today that could totally change the life of the business. So, and one of them was for South America, which I didn't even think. They own big data centers here, but they own them in South America, and their South American need is just as big as the one here. And they were pretty much saying, "Okay, what do we got to do?" And me coming from the data center background, when Chuck said power is an issue, oh, it's beyond an issue. You've got shells of data centers that have been built that are just sitting there empty. So if they can work out a program where they can get power from us for 5 to 10 years, where the utility is telling them, "Hey, it's going to take 5 years to build out," they don't want that shell sitting there for 5 years empty. They want revenue. They've got big customers that are ready to take the whole 20,000 square feet of raised floor, but they don't have power. Here we come. We have the assets and we can deploy quick, and that's why we have
Listen, Puerto Rico is still, I mean, after that big
yeah, well, they put the power plant down there. So yeah, he's already been down there. So yeah, I'm telling you, it's just
we built power plants in South America, all over South America, and also obviously Puerto Rico. We responded in 2017. We built 2 power plants in about 17 days after Hurricane Maria. So we're that is one of the places where we do get phone calls from still today, even though I'm technically not, I'm not with that company anymore. But the need, and everybody can read it from all the analysts and all the literature out there for power in general, but then in particular power as it relates to the data center and computing needs is it's overwhelming. And so it's a great space to be in right now.
You have 2, not 1, but 2 potentially massive TAM opportunities.
Oh, definitely.
Yes.
And let's not forget, because I don't want to disrespect the technology that DUOT has with the railways, because I do believe that will become the industry standard.
Sure.
Should become the industry standard.
Absolutely. Yeah.
Right?
Yeah, so, but what it does do though is, so I kind of consider, Duos Tech, right, as a platform right now of those three lines of businesses. So many of the skill sets and the talented team members we have that have traditionally been working on the railcar inspection portal, probably at least 50 or 50% or more of them are equally talented and capable over in the other two lines of business. So that helps, it helps that you have a platform already built that can fire up these two other lines of business and not, trying to figure out, where to put people in their desks and stuff. It's already in place. We're already off and running, and selling.
Doug, or Chuck, you just reported a quarter. I'm sure you're probably I know you even indicated you're disappointed with where the numbers are at this particular point in time.
Yeah.
But looking forward, how are you feeling?
Yeah, looking forward, very, very positive. So, again, the reason why our financials have, struggled for the last couple of quarters, again, has been primarily based on delays from, our one or two of our major customers and our railroad customers. And those delays are out of our control. And again, just further, validates why we need to diversify our business beyond that small group of rail customers. So obviously we're going to diversify inside the rail space by offering our subscriptions now to potentially, there's probably 3,500 different possible customers for those subscriptions out there. That's one way to diversify. But the other way to do it, obviously, is what we're doing right now, where it's like, okay, you've got the expertise, the platform, the ability, the talent, and the market demands for these edge data centers and for the power. And so that, we're very, very committed to diversifying into those areas while still growing that rail business, because the potential for that rail business still is very, very high. And I don't want anybody to lose sight of that.
And the technology isn't just for railway. I mean, it's any moving object, right? I mean, that can expand out exponentially.
No, that's right. I mean, basically, we've talked about, you could apply it to trucks and automobiles. You can apply it to aircraft. We've talked before, I've had very serious discussions with a large national carrier airline, civilian airline. And then we've also had discussions with the United States Air Force for some applications of that technology. So, and we have, we've got 10 patents on that technology. We have some more coming, along with the patents that we're currently applying for Doug with his edge data centers as well.
I mean, look,
Cool.
it's so exciting to me because I tell you what, the first time I met Chuck, and I've said this consistently, I knew I could feel the leadership emanating from the guy. It was just an intense feeling. And, look.
Been doing it for a long time now.
You know what? We've gone through a pandemic. We've gone through the fastest interest rate hike cycle in the history of mankind. We've gone through the worst supply chain issues in the history of mankind. And it's taken longer, but I never have wavered or doubted that this is where this is actually much bigger than where I probably had foreseen things going. This to me is like, it's mind blowing in a lot of ways. And to see the stock sitting where it's at today, I don't give a shit what happened last quarter, because that quarter's over. What I care about is where are they going? And the team that has been assembled, the technology expertise that has been brought in, and the demand for these things, it's going to take the lumpiness of the railway out, I think, right? That becomes actually gravy.
Yeah, that's exactly what we're trying to do. You know, we're always trying to strengthen, right, the recurring revenue side of the company. Every good business is trying to do that. The business that we created here, Doug and I, together with this edge data center business with Duos Edge AI, that is almost a 100% recurring revenue business. And that's what that model is. And he'll have the first 3 edge data centers in the ground producing that recurring revenue, probably starting late in the month of October, early November timeframe. And that will be our proof point for that business model. But Doug's already done it before, so
Yeah, we've
we're
proven it.
not proving it to ourselves.
Yeah, yeah.
We're you know, so that's you know, and on the power side, that business model is also to produce recurring revenue, where effectively what we're doing is we're selling megawatts with that business, and that's what we previously did at APR Energy. So yeah, we're pretty excited about it. So I think we were talking before we started to record this about, you know, how will we provide the capital necessary to do all this. Again, because publicly traded right now, I'm not going to, you know, talk any specifics about when, how, and why we would raise capital. What I will say is that Doug and I and the team that we have here have a rock solid plan that I am highly confident in to be able to you know, fund those 2 new lines of business, and do it in such a way that our current shareholders will be very, very excited and happy about how we do it.
All right. Listen, I could talk to you guys all day long. Chuck, I know you have a hard stop, and Doug, I love the energy, man. I love the energy right now. This is
Oh, it's good. It's good. It's hard to hide it, brother. It's good.
it is so exciting. Yeah, I just want everybody to. I'm going to share this. Doug and I actually have a mutual. What a small world it really it can be. But I have a personal friend, and that I started talking about Duos, and I was telling him about how they're spinning off this thing, and you know, he's like. I said, the guy's name, I'm interviewing him, his name's Doug. He says, well, his last name wouldn't happen to be Recker, would it? And I said, well, as a matter of fact, yeah, it is. And he was so excited. He's, man, you're going to love Doug. He's so smart. And I mean, that for me was like this huge, like, because I really didn't know anything about you, Doug. But,
Sure.
you know, hearing this directly from a friend of mine that I respect, his opinion, it's just like it's like, wow, this is almost like amazing, right? I just think Duos is going to do tremendously amazing things in the next couple of years.
You got that right. I'm putting 1,000% into it, and I haven't failed yet, so fingers crossed. So, no, but this is going to be good, and our friend is going to help us too, because we're definitely going to South America. This will be big. I'm excited. Haven't slept yet. It's been 3 months. I need to sleep.
You know, like I said, I'm not gonna focus on the last quarter. Last quarter is done. I think Chuck, what do you feel the next catalysts are? Getting those 3 up?
Yeah, there are a couple key things that we're working to, you know, take from the good idea phase into execution phase, right? The first one is getting the first 3 edge data centers, you know, fully installed and commercialized. And again, I think Doug and I are highly confident at this point that is on track. And you know, I said it publicly in my earnings call that we expect to see recurring revenue start to come off those, you know, in the October-November timeframe. That's the first thing. The second thing is it's on the rail side. We actually are in the midst of negotiating or putting together the final contract with a large chemical manufacturer who is asked for a full-on railcar inspection portal on their facility. Believe it or not, also down in Texas. Believe it or not, so Texas is being kind to us right now. And then, the third thing, which, will be to be announced, will be some exciting news, I think, around our power business as it relates to data centers and that need for power. So I'm expecting to probably have that in the next, let's say, 90 days. And when we're able to do that, everything will all make sense to you.
Well, that's different than the call I had yesterday. He said I couldn't come back home without an order. So
Well, that's normal stuff. So
That's fantastic. All right. Well, listen, Chuck, I know that when you think it's time to have a follow-up to this follow-up,
Sure.
you'll let me know. And I'm just going to say this. I don't tell people what to do. I don't tell them what to buy or what to sell. All I do is present what I think is a compelling story. This has been a compelling story, and it's required patience, but I believe we are on the cusp of that patience paying off extremely well. And if you're not following the story, then I think you need to go to DUOT Tech website and sign up for their investor relations email alerts. And I'm just going to real quickly want to go over the chart here, and it's sitting on an area of potential support, price support, but I got to move your logos here. And I think this is, I'm going to call it a gift. Because if you just think about the size of these two individual businesses, regardless of the rail car, there is a massive TAM here. And to have what's the market cap right now on DUOT? Chuck, do you know off the top of your head?
We're probably sitting around the 20 to 25 million range today, which is ridiculous. Yeah, we're about, let's just call it about 20 million.
Yeah. Okay. So the chart, if you look at it here, it's sitting on an area of support. Interesting candle right here. Somebody tried to flush it. And I don't care where a stock trades throughout the day. What matters to me is where it closes. Somebody tried to put a little pressure and have this thing maybe try to take out $2 or whatever, but it pulled that. It by the end of the day, it closed up in the upper portion of that candle. That to me is a sign of strength. And you're sitting on this area that is acted as support. You're just kind of moving sideways. You're trading in a box between, let's call it 325 and 225. I mean, this dollar range, right? When you take out 325 with some conviction, and I do believe that will eventually occur, you've got some resistance here at 270 or so. It can trade sideways for the longer it trades sideways, the bigger the base. The bigger the base, the higher the space when it finally cracks. So I think this is a great opportunity to start building a position. If you're not in it, you start dipping your toe. You don't have to go all in, but I think this is a very compelling area. And that's just me talking. Anybody?
you talking?
Any insiders actively purchasing shares? Chuck, do you know?
Yeah, we've had we have had, again, we're thinly traded. Everybody knows that. Fully diluted, we still only have like 14 million shares fully diluted. And a lot of our stock, probably over 50% of it is held by long-term shareholders. And those long-term shareholders have continued to participate, in small, pipe raises. We haven't done any of that recently. And they continue to be very supportive. We talk to them about our business plans that we have with Duos Edge and with the power side of things. They're very supportive of that. And I think they also appreciate that, we don't go out and do crazy capital raises, willy-nilly and dilute the crap out of the stock. And we've probably passed on 5 or 6 opportunities to take capital in, and we've actually passed on it because, it would have been dilutive and negative to our shareholders. So that's the kind of management team that we are. And I think anybody that comes in new, like to your point, should appreciate that.
All right, fantastic. I can't wait. It's like a movie. I want to grab my popcorn and just see what happens next, right?
That's right.
Coming to theater soon. Yep.
And I'll send you an invite for the first one. We're everything's on track, so we're shooting for the 15th of September. So maybe I'll throw you on a plane. You can come physically see that little data center and walk through it.
That's fantastic. Guys, I know you're super busy. I appreciate you taking the time to give us an update. And I'm telling you, people, put this one on your radar. Do not let this thing fall through the cracks. You're going to regret it. So
Thanks, my friend.
thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Chuck Ferry and Doug Recker from Dous Technologies and Dous Edge AI. I hope you enjoyed today's interview, and if you did, please do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.